Hey, Tammy.
Hey, Brian.
It's podcast time.
It sure is. And we've been having so much, I would say, pre-fun to this podcast.
Yes.
We've been laughing hysterically.
Yes, we've been having all sorts of conversations. Sorry, folks, it's not recorded. Well, maybe it is, but I don't know if we'll share it.
I don't think we should share it, Yeah, interesting conversations. But, I do want to talk about sports.
Oh,
okay.
So I'm fine with that.
So, Brian and I have this kind of running joke because one time I called baseball boring, and I think Brian didn't talk to me for like a week, maybe.
Yes, that is very offensive to me.
Yes, but you know what? I've come to kind of try to enjoy the sport a little bit more. I even told you that I watched a little bit of that Phillies-Miami game at the end. So, but how are they doing? Tell me how they're doing.
Well, the Phillies, just the day before yesterday, have clinched the division title.
Whoa.
So they're in the playoffs. They're division champions.
Yay,
now
Phillies.
what they're shooting for, I think they only have maybe 10 more games for this regular season.
Wow.
There's the Milwaukee Brewers have a game and a half on them. They're not in the same division, but whoever has the best record at the end of it gets better positioning in the playoffs and gets home field advantage, certain things
so that
there.
does matter.
So if they could finish off with the best record, then they're really in good shape.
So you're saying there's only one other team with a record better.
There's the National League and the American League. So in the National League is what we're talking about. There's one team who's one game and a half of them, so they're right there neck and neck. So if the Phillies win, let's say 2 or 3 games, and the Brewers lose a game or two, then we're even, and then play that game to the end of the season. So we'll see.
The next podcast, you'll have to explain the difference between national and American, because why isn't? But we'll get to that later.
Sammy, see me in the office at this podcast, please.
Now I get the whole NFL. Well, there's divisions, but like national and American, like that kind of sounds the same. But it's okay. It's just messing with my brain. But I'm sure
if anybody could see this right now, and my look on my face.
Brian's
but it's funny. A friend of mine who's not a big baseball fan, texted. We have a group text going on, and 2 of us are huge baseball fans.
Oh, okay.
And he asked why is it something? Because there's a few guys in the league this year that might hit 60 home runs for the year. And he goes, "Why is that such a big deal? It's been 100 years since someone hit 60 home runs, barring some other things. I'm not going to get into all that." And he goes, "Why is it so different? Why are these guys is this sport just not getting any better?" Well, oh boy.
Oh.
He just did something wrong there.
That was poke the bear comment.
But you have to understand. And see, you got me on something here. If you hitting a baseball is one of the hardest things in sports to do. And let me say, if you bat 300, okay, your hitting percentage is 300, meaning I get 3 out of every 10 hits.
Oh, okay.
3 hits out of every 10 at bats.
Okay.
I'm in the Hall of Fame. That's 30%, Tammy.
Who else celebrates
Anything
30%?
Else in life, 30% is failing.
Absolutely.
In baseball, 30% you're in the Hall of Fame.
Wow.
Doesn't that put something in perspective as the difficulty level of what they're doing?
I don't know. Have you ever tried to hit a golf ball?
Well, I'm not going to lie to you there.
Well,
that's
hitting is one thing. Hitting in the correct direction is another.
Yes,
I guess.
that's a good point.
Yes, that is a good point. Okay, so 3. Yeah.
Yeah.
Okay, well, I kind of get it. But
you know what? Maybe we'll do a podcast sometime, and I will just talk about baseball.
Yeah,
the whole time.
maybe. But it's going to have to be short because I feel like my attention span is kind of short.
It's already.
But I am excited about the Eagles.
Yep,
So the Eagles have
2-0.
pulled out 2 wins against Dallas with our opener, and then the Chiefs.
Yep.
Poor Chiefs, their face. Andy Reid. I mean, I do love Andy Reid. I really do.
I do too, but I'm not thinking poor Chiefs.
I know, but I did feel bad for them. But and then interestingly enough, because you and I share our passion for not liking Dallas. Sorry, because a couple of our staff actually like Dallas. But
you need to make that a hiring requisite.
Yeah, they barely pulled out that win with Giants.
Yeah, I was really rooting for the Giants. I never root for the Giants,
and I don't either because they're also in our division. But
yeah, well, it was fun though. It was a fun weekend for sports.
Yeah.
So. Well, listen.
Yeah, today what I thought maybe we do, we always are in tune with our listeners, and Denise has let us know that we've gotten some great response that they like it when we kind of give them this brief format of tax ideas and tips and strategies. And so why don't we, instead of a guest today, why don't we kind of do a little bit of that today?
Yeah, so I have a few updates here.
Okay, great.
All right, so one thing is I think we may have talked about this a month or 2 ago, but the IRS is now not going to be letting you make payments with checks starting next year. So meaning, if you owe them, you got to go online, or we can do it through our software for you, where it automatically comes out of your account.
But these would be like an example of estimates.
Estimated tax payments, amounts due on tax returns, so forth and so on. Well, there was an executive order signed by Trump regarding payments you're going to receive from the IRS. So you're getting a refund check. Those will no longer be coming through a check. You are going to have to use direct deposit.
Wow.
And according to this article I read, it's starting after September 30th of this year.
Which is interesting because the personal filing season is not done until October 15.
Right.
So we could actually have clients.
Yeah. I have to think that if you still do it,
right.
that's why they put these dates on here. But it's interesting because as Tammy knows, we have clients that don't really feel comfortable putting a direct deposit information on their tax return, which is their routing number, bank number, and unfortunately, it seems like it's going to be mandated going forward.
Wow. Yeah. So we're going to have to change our because we I think on there say something about a refund, doing a direct deposit in. Now we're going to be like attach a check or deposit ticket.
Yep, going to have to.
It's going to be mandated.
But let me say this. So, also, Tammy and I have spoken about the new tax bill, the great big beautiful bill, so forth and so on. The one big beautiful bill, excuse me.
Yeah.
And we've told you many, many times that there's this thing in the media about no tax on tips, no tax on overtime.
Yeah.
That is not true. It is a deduction for tip income and a deduction for overtime income up to some limits. However, Tammy, this is going to blow you away.
Oh, no.
The IRS just came out with the draft form. So the form that's going to show these numbers, this deduction, instead of it saying tip deduction, overtime deduction, it says on the IRS form, no tax on tips section, no tax on overtime section. It is I am mind blown by this. Yeah. It is not accurate, and it's on a tax form. I just find that...
Is somebody looking over this?
I am so blown away by this.
I know everybody can't see me right now, but my mouth is hanging open, and I just dropped my pen. I mean,
it's unbelievable.
It's unacceptable.
Yeah, it really is, because now, people hire us to do this work for them because this isn't their expertise, which is what we do. We hire people that we're not good at, things we don't do. Yeah. Because it's their expertise. And they're going to see this return. It's going to say no tax on tips. Well, why am I only getting this $12,500?
And now we got to explain it.
So it's just...
Please tell me that form was in draft form.
It's in draft form.
Okay,
so I'm sure the comments will be made. But
I imagine the software companies might be like...
We shall see. And then finally, one thing I wanted to update folks on is catch-up contribution rules in your 401k. Mm-hmm. So there was this Secure Act 2.0 that came out in 2022. And there was some language in there, and it was administrative error that they did. But when you have administrative errors in regulatory language, you have to go with the regulatory language. The IRS can't interpret that. They have to go with it. There has to be a bill to be passed to change it.
Absolutely.
And they said this was going to happen, but it hasn't happened. Anyway, if you are over 50, you can put in catch-up contributions. Mm-hmm. Well, if you make more than $145,000 starting in 27, it was supposed to start this year, but they extended it because of time frame. If you're over 145 and you do the catch-up contribution, it has to go into a Roth account. Yeah. It cannot be pre-tax, get a deduction, and be in a traditional IRA. Mm-hmm. What makes that, one, you're not saving any tax on the current deduction.
Right.
Two, it's going into a Roth account. That's great. It's tax-free when you take it out, but it is very difficult, I believe, for investment houses to manage the difference between what's what.
I know.
How much. So what if you said, Tammy, let's say for the next 5 years you put into this Roth, so you're putting your catch-up in this Roth, and how do you know? You go to your investment advisor, I just want to take a Roth distribution. Yeah. Well, it's commingled.
Yeah. Is it?
We got to do a calculation. It's not going to be dollar for dollar. So anyway.
Well, I imagine what's going to probably happen is I know a lot of you that are employers. Mm-hmm. Let's say you take this money out of them and then you match. Mm-hmm. So a lot of times you log on to the platform and you enter the employee and then you do the split. I would imagine there'd have to be some kind of, allocation.
Yeah.
For that.
I mean, I've seen it. It's just not a simple thing.
Exactly. Yeah, and it's even more complicated because you could argue, is that every time I have it come out of my paycheck, or do I put it first to to max out, and then do I flip it to the overage? So I mean, it could be.
It's going to be administratively difficult.
Well, and that's the challenge sometimes, and I get it, but that's the disconnect between passing, legislation, and then how does it really play
Right,
out?
exactly.
And then kind of putting the cart before the horse. Like now, like you said, the IRS can't make decisions. They have to, they have to get this guidance.
There has to be an act of Congress to make that change.
Well, we are talking a lot about going into this end of year. I can't believe it's already mid-September.
I know.
Here we are almost into Q4.
Wow.
This is a big tax planning season for us. We love it because this really gets us in front of maybe clients that have been, distracted by their business this year, everything going on, and we can really get in front of them and do tax planning.
Right.
And tax planning is just huge. It's a lot of facets.
Oh, yeah.
So some of the things I was thinking of, and maybe you and I could just kind of go back and forth, but most of the tax planning we do are for people with businesses or like high net worth.
I have a lot of investments, maybe some rental properties. Because you mentioned tax planning is interesting. I always tell the staff it's more of an art than it is a science.
Yeah.
Because you have to make assumptions, you have to do some projections, and so there's a lot we can be doing from now until the end of the year to help save you some taxes.
So some of the documents that you could think about possibly gathering or inquiring about, reach out to your wealth advisors. Or if you're not with a specific wealth advisor, but you have a platform, go on and see what you have earned in interest, dividends, and capital gains, because that is often missed in a tax planner. Or a client will say, oh, just do what last year was. And maybe because the rates are relatively similar with interest, maybe that's okay. But capital gains is almost never the same as last year. Never.
It all depends on your portfolio and what's going on. If you're in different types of funds or investments, things get sold. And I can't tell you how many times over the years, well, how do I have $50,000 in capital gains? I didn't take $50,000 that money. Well, they sold something to buy something else. They rebalanced your portfolio.
Right.
You have to pay tax on it because you have a gain, and you just reinvested it in something else. But it's still income.
Yeah, it is. And so make sure, too, that you really understand what's happening within your portfolio so that you can tell us so we can plan, for it. So really when you think about like a 1040, if you do have wages, we're going to ask you for your year-to-date pay stubs.
Sure.
And then, of course, we talked about the interest and the dividends. Brian brought up rental income. That's huge because maybe, again, you thought it was like last year. Well, did you remember that you had $12,000 of qualified repairs and maintenance that maybe you don't have this year? Maybe you had a vacancy last year or a partial vacancy or a delinquent situation that you don't have this year. So that can do a swing. And then your businesses. And the reason why it's so important to make sure your business is correct and up to date, again, so that you could be using your internal financials as a good management tool, knowing, did I make money? And if I'm losing, why am I losing money? Don't wait until the end of the year to, to realize that.
How many times over the years, Tammy, have we heard a client say, I don't have any cash, how can I have income?
I love that one.
Those two things are not mutually exclusive.
No.
So you could have debt, you could have bought an asset or something like that. So it's not always going to be that I don't have cash, I must not have income. That's why your books and records, your balance sheet and P&L need to be up to date so we can do proper tax planning and projections. Talk to you about, okay, here's where you are through September 30th. What do you think? How do you think this Q4 is going to look? Do you think it's going to be similar to last year? Do you think it's going to be down or up? Or do you find any roadblocks coming up, any obstacles? And we'll plan for that so that when we get, and then if your income's way up, then there's some tools we can do for spending to get that money to come back, that tax liability to come down.
There's also a confusion about when to pay the IRS.
Yes.
Believe it or not, you can't just owe them and pay them all at once at year end.
No, you can't.
If it's over $1,000.
Correct.
So there is a thing called estimates. And estimates are due every April 15, June 15, September 15, and January 15.
Correct.
They talked about actually moving, and that didn't go through.
I never did.
Yeah, I was just remembering that. So there is a quick calculation, and it's called the safe harbor, and it's actually making sure that you pay 110% of last year's tax. So if you owed if you owed $100,000 last year, then and if you pay 110% this year, then if you owe the IRS in April, you won't be penalized for owing the IRS.
Yeah, you owe money, but you won't get penalized for underpayment of taxes throughout
And then
the year.
keep in mind, if you get extended next April, that is not an extension of time to pay that overage. It's just an extension to file the taxes. Now, one strategy we tell clients that maybe are in business, but they also take pay, is that you can have extra withholdings. So yes, believe it or not, you can over withhold Fed and state. And the reason why it's kind of smart to do that when you're a business owner is that withholdings are considered to be proratively paid throughout the year.
Even if you pay it on the last day.
Yes. So sometimes I'll have a client that I'll look at and say, you know what? And we did this last year. In December, they paid themselves a $50,000 bonus, and we had it all go to Fed and state. And then, therefore, the fact that they didn't pay estimates throughout the year, it was okay.
Correct.
So it met that requirement. Now, again, if you don't think there's going to be any change, but boy, you better be sure, you can just pay what you owed last year.
Yeah.
Or then there's the 90% of
Current year
current.
tax.
But boy, you better be sure.
And that's very difficult because with 90%, you remember Tammy mentioned you have to pay Q4 times throughout the year.
Yeah.
So the first quarter, you got to pay what you 90% of what you think you owed in the first quarter based on that income. So you would have to come to us quarterly to do your tax planning.
Right.
And it's not as simple.
Which not everybody wants to do.
Yeah.
So a lot of times we just tell people
pay the 110%.
Pay the 110%, and at least you're covered. But then we do a lot of tax planning because they want to know, we don't do a lot of tax planning to necessarily manage this safe harbor. What we do it for is that you can make educated decisions by year end of, should I buy that piece of equipment in 25 or should I wait till 26? How much can I afford maybe in bonuses to my employees? I'm looking at expansion. And then what other conversations come out of it?
Yeah.
Do you have a R&D?
Yeah. Why don't we set up a 401k plan or something like that? Make an IRA contribution depending on your income. Exactly. There's all sorts of things that you can do. Because for me, I'd rather put money in my pocket, my retirement plan, than pay more to the government if I can. I mean, we have to pay our taxes, right? There's we can't get away from that. But can we mitigate it? And I always tell people taxes is timing.
Yes.
So if we can reduce our taxes this year, maybe next year we're going to have to pay a little bit because we don't need that piece of equipment. We bought it this year, but we'll plan for that, So tax planning is super important.
Yes.
It's more like Tammy said, it's not just we're not managing the safe harbor for the most part. We're managing how much can you save in taxes, or sometimes it's just a matter of I really don't have any more money to spend, but I just want to know how much I'm going to owe April 15th.
Yeah.
So that I'm not surprised when you call me April 1st.
Yeah, cash flow management.
So now you have 3 months, pretty much to plan for a tax bill.
Yeah, and there's strategies that you cannot do after 12/31. So, for example, if you want to income shift to family members that perform services for the company, such as children or your parents, you could do that, but you got to do it before December 31st. A lot of retirement contributions, like for example, a simple plan, you have to have that set in place by October 1st. So you can't be doing a brand new simple plan. Now, if you've got an existing one, but you can't make simple contributions in December if you never set up the plan.
Right.
SEP. So a SEP plan is great for individuals. It allows them to contribute 25% of their income or their 25% of their wages, but their participation rules. And SEP contributions are one of those nice things where you can make it by extension date. So that's kind of nice unless it's the employee, part. IRAs, though, you only have until April 15th, and that's not with an extension that you could do later. So there's so many things to understand with timing, and that's why it's very crucial to think about tax planning in Q4.
Yeah,
really.
I mean, and one final thing I could think of, Tammy, is let's say you have you're going to sell a piece of property.
Yeah.
And they say, well, we're going to go to settlement on December 15th. Push that sucker to January.
Right.
Yeah, you're still going to pay tax on it, but then you have another 18 months before you even have to worry about cutting that check.
Right. Well,
so put
interest,
it in your investments.
Exactly.
Earn money on it, but instead of giving it to the government.
I mean, CDs are still running around 4%. Money markets can be close to 5%. So yeah, you can earn a nice amount of money.
Just put it in there. Wait a few weeks to settle, so you can kick that tax into the next year.
Yep. All great information.
Yes, indeedy. Good stuff. Thank you.